Good afternoon. Today is Monday, and we're right now in March the 6th, and the time right now, Singapore is just past midday at 12:09 in the afternoon. And over the weekend, we can see that the Wall Street itself managed to close on a high note. In fact, this is the second consecutive day the market ended up on a positive note. We can see that the market is getting ready to rally, and this is the 4 hours time frame. We can see very clearly the market has a very major push here, and because the market has a three-wave pullback after the massive run-up to 34,712. This three-wave pullback suggests that the market has hit a bottom and is getting ready to rally. Now, when we look at the daily time frame, we can see that the market has a very obvious five-wave structure here. Now, what we are seeing here is a 1, 2, 3, and the entire February of consolidation here is basically a fourth wave. And if this is the case, the market bottoms at 32,500, the market is getting ready to rally. At the bare minimum, the market is going to go to 35,285. That will be the a complete five-wave classical structure here. And once the market hit this level, 35,285, be very careful chasing after it, because the market is very vulnerable to a pullback to where it originated at 32,500. So the market is definitely looking to go up. So if you are a day trader, short-term trader, maybe you can ride this wave all the way higher beyond the 34,712. But beyond that, do not chase, because the market is becoming vulnerable to a pullback to the to where it started here at 32,500. So do we see the same structure in the other equity index? Not quite, okay? In the S&P 500, I've always maintained that this three-wave rally here does not look complete, because it doesn't look symmetrical, because this second leg here, it looks a bit shorter than the original leg here. So if we are looking for equality here, then the market should be able to go up to 4,373 to 3,518 thereabout. So we have a bit of a room upstairs here. So the market high at 4,195 looks like it will be taken up this round. So again, if you are looking to buy, maybe this is a good time to go in and buy and put a stop below the 3,928 level here, and then take your chances with the upside. Okay. Over the Nasdaq, we are again seeing something very different. Based on symmetrical proportion, the Nasdaq rally from 10,440 looks symmetrical, because it looks like equal distance between the first and the third leg here. So we can see that based on this, but so far the market has a three-way pullback and bottoms out at 11,830. And because of this, it will be the last candidate. So what may actually happen, one alternate scenario is that this three-wave rally here could be the part of a larger degree three-wave. That means that this entire move here from 10,440 to 12,881 is part of a first leg of a larger ABC move. If this is the case, then a larger ABC move may see this market move this way, okay? But immediately the target is at 13,720, okay? Or at the so this is where I think the market is heading, okay? This possibility will give us another set of a larger degree three-wave rally. So it has quite a bit of upside potential for now, okay? So for this coming week, I think the money is into the upside in terms of equity index. When we look at Asia, we are seeing something a bit of a different, but also in Asia, we're beginning to see signs of bullishness returning. In the Nikkei, we can see this morning the market have a major run up, and this does looks like a three-wave another set of three-wave pointing towards at least a move towards possibly 28,500 to 29,200 levels, okay? So this is a near-term possibility. But if you look at a larger degree three-wave, then the market has all the potential to even test the 29,700. So depending on which structure you're looking at, immediately this will be the structure we should be concentrating on, and that suggests 28,500. But if you look at a larger degree three-wave, we are looking at 29,200. So by and large, market is on the way up here. Over in the Hang Seng, we're also seeing similar move. Hang Seng has been very consistently been going up, and this market here, despite the pullback to set below 28,000, looks corrective in nature. And when we see this on Wednesday, we see the major kick up on Wednesday based on the very positive China PMI numbers, which is the Purchasing Managers Index, showing us that Chinese manufacturing is coming back in a big way. So that is giving underpinning the Hong Kong market equity prices. So this could actually be the catalyst to push this market beyond all the way 22,700. This market has a potential to go all the way to 27,875, perhaps even to test the 30,000 level. So there's a lot of upside potential here based on the structure that we are seeing so far. However, based on the CSI 300, now I'm not using the Shanghai Composite because it looks like market is following the CSI 300. So this one have a different structure. It has a three-wave rally, has not quite hit its ideal target at 4,318. Okay, so there may be a little bit more upside. That is reinforced by the fact that the pullback from 4,267 is a three-wave affair. Although it did not quite hit the ideal target at 4,000, but it looks like the market may have the potential to eventually go up to test this 4,318, 319 levels. Okay, so by and large, it is still positive looking. Over in commodities, we are seeing a little bit of recovery in energy prices. On Friday, we can see that the crude oil prices actually rallied, but could not quite go up to $80 per barrel. So the market may actually attempt one more time. But the entire structure here looks very corrective. So I don't think it's big time yet. The market is slightly doing a corrective three-way rebound. And the near-term target is $82.10. Basically, I'm already long and I have two long position because I went in the market too early. And right now, I'm hoping that I could get out with some profit at $82.10 for my worst entry position. Then I want to keep my best entry position for a chance for this market to rally in the bigger three-wave rally to somewhere around $84.80. Okay, so that will be my game plan going forward. But by and large, it does not look very positive. Although the market is going up, it doesn't look sustainable over the medium to long term. Okay, there may be a possibility the market may actually come back down again. But the one that is actually getting me excited is this natural gas. Natural gas has actually bottoms out at about $2, just above $2. The market has actually collapsed 80%. So for the market to actually have a technical rebound is very reasonable, and the bare minimum this market may move to is $3.43. Okay, so when we look at the lower time frame and we look at the 4 hours, I have been wanting to buy this since the whole of last week, but the market did not give me a chance. There was no retracement whatsoever. The market continued to charge higher until Friday closing, and this morning we have a bit of good news. Market come back down with a gap, and I hope that this structure here can unfold in a three-wave corrective pattern. I am basically having limit orders at the bottom here. My first order is at $2.56, and hopefully this is a three-wave pullback, not a collapse. So I will have to see the structure here and trade accordingly. But I'm still thinking that because of this 80% collapse in energy prices, in natural gas, I think the market is time for recovery. Okay, over in gold market, I'm using the COMEX front month futures as a guide. You can see that the rally in COMEX Gold is $1,810.80. This is a three-wave recovery, so that means that it is corrective. We are not ready for prime time yet for market to go all the way for the bull market to actually resume. This is technically a rebound, and the immediate target is at $1,877. Now this one I have 3 long positions. Actually I have 4. This one was top out at the bottom here. So basically what I want to do here is I may actually come out ahead of this position here. My target is at $1,877.10 basis the front month futures in COMEX. So if the market can go up to test this level, I'm going to get out all my long position and just stay aside and count my blessing, because it could have ended up a lot lower, because I was thinking all the while that this gold market may actually move down all the way to April, and we are only in the first week of March, so there's a long way to go for the market to actually hit bottom. So I want to play safe for precious metals, but over the long term I'm going to buy. Okay, silver looks a little bit also tentative. The market is also recovering in a three-way structure, very corrective in nature. It may have 2 sets of three-way for all I know, but I think the target nearby is at $22.18. It may not have enough momentum to go up all the way to $22, but let's see what happens. Right now I have no position, so just stand aside and watch the structure unfold. Okay, over in dollar, the dollar actually picks, the dollar index picks at 105.32, and this market is pulling back in a three-wave. So we are possibly seeing something like this. Okay, a three-way pullback in the dollar index go all the way to 103.88 to 103.58 levels. Now this will be a much more comfortable level to go long again. So for the meantime, I think the dollar will continue to come under pressure. That means other currency is likely to rally. We are seeing the same thing in the dollar versus euro versus the dollar. The euro dollar recovery is a three-wave affair, so it means that this is a corrective rebound, not a bull market. So if this is the case, the currency may actually be able to go higher. So what we see here is this possibility is we are seeing a three-wave recovery, and if this is the case, 107 to 107.70 is going to be a possibility. This is an area of possibility here. So if you are going to be long currencies, just to understand that this is possibly a technical rebound, not a bull market. Okay, same thing. The structure in sterling versus the dollar is a little bit more complex. It's more consolidative, very unlike what we see in the euro versus the dollar. So if you have to pick a currency to trade, I don't think this is the best pair, because structure wise the market is still locked between 121 high to a low of 119. So between this 200 pip range, the market is right now right smack in the middle of this entire trading range here. So there's no very visible high probability trading opportunity here. The same thing can also be said for Aussie versus the dollar. The Aussie versus the dollar did not quite make it to my ideal target price of 0.6635, but it actually consolidated around this price, and it looks like the market is doing a corrective rebound currently, and the best we can expect is possibility a move like this. Okay, very little upside potential here, maybe go up to maybe 0.68. That's about it. Okay, unless this is a more complex corrective pattern, but when we look at this, it does appear that there is very little trading opportunity in the Aussie versus the dollar. Now when we look at dollar yen is also showing us very similar structure to what we see in the dollar index itself, although it is not as clear cut. We see that the dollar have actually peaked at 137.10 and the market has been pulling back. So far there is no three-wave visible structure here. We will have to let the market unfold over the next few days to tell us if and when this is a corrective pattern. But I think at 134 we're going to see the return of buying interest, because this was the last leg where the market actually went up. So we can see that there's obvious demand here based on the idea that this is a very strong reversal pattern. So this is an area of demand, so do watch out for this area if the market drift all the way there. Okay, dollar Canadian is also corrective in nature. We have a three-wave rebound, and it look like they may actually come back down to test the 135 levels. Okay, so if this is the case, buying interest should most likely re-emerge from this level. So in short, what we are saying here is the money is not in currency this week. The money is definitely first of all in equity index. So if you're trading equity, it's going to be a great week for you. If you're trading equity index, I think you'll be better to trade on the long side of the market, whether you're trading Asian equities or US equity markets. Okay, but I think the best of the best opportunity lies in the crypto. Okay, crypto have a massive rundown on Friday on the back of the news that the Silvergate, which is a digital bank in the States, has already come out and said that it may not be able to survive, and that's caused a major sell-off. But you can see after the initial sell-off, the market has been going sideways throughout Saturday and Sunday. It means to say for 48 hours the market did not drop any further. So this is good news, okay, because this is a knee-jerk reaction to the news, and the fact that market tops at $25,270 is a three-wave affair. So if the market continue to drift lower, ideally continue to drift lower to the 21,500 to 20,000 or even 21,000. Okay, I think that would be a great area to look for buying opportunity, because this is a three-wave, and if the market is true to form, this could be an area of opportunity. I'm going to look for buying interest around 21,000 to 21,500. If I see one, I'm going to take it, because if you look at the Bitcoin from the daily time frame, this is a very bullish development, because what we are seeing here is a very clean 5-wave rally, and after a 5-wave rally, typically we will have a 3-wave pullback. This will be classic Elliott wave pattern, and if this is the area of demand that can actually hold this market, the top side bare minimum, if this is an equality move all the way up here, the target is at 31,300. Okay, so if you ever want to do this, which I think I will, okay, depending on the structure, if the market ever drifts down to $21,500, okay, I want to be able to pick up some long position in exchange for 31,300 potential with a risk again, we have to see what is the low here. Is the low lower than 21,300? So I'm going to put my risk maybe a little bit lower to here. Okay, below this price of 20,000, I will take it from here. Okay, and I want to exchange this possibility here with the potential to go up to 31,000. Okay, so this is something that will be very excited about, and I'm going to watch this like a hawk. The same structure is also very visible in the Ethereum market. We have 5-wave rally followed by a potential 3-wave pullback here, and the target area is $1,530. So the market just need a little bit more because the low traded so far is $1,543.60 so far. So we have the potential to actually drift a bit lower, and from once the market hit this price, I'm going to be seeing to see if I can get a price. Okay, sorry, I have to move this a bit lower. Okay, it's no longer at this price. Let me do a bit of correction here because there's a new development. There's a new high, new low here. Okay, I think will be still good. 1,450.97 and 1,494 and 30 cents. Okay, this will be my new target range. Okay, anywhere just marginally below $1,500 will be my ideal price. The market can come down here. The top side potential on the daily time frame based on the 5-way structure that I see, at the bare minimum, we will be able to see 2,164. Okay, so this will be very, very ideal. Perhaps the market even have a potential to go up even higher to a $2,500. So it's great trading opportunity here. So I think the money is going to be in crypto this week. So wish you guys all good luck because I will be watching this space. So my ideal trading will be in equity index. Next, no, first will be in crypto, then will be equity index. Guys, thank you very much. I will update you again tomorrow. Bye bye for now.